Looks like we're live on YouTube.
Does it show up in the gallery mode?
I see it on the top left, but I'm not on YouTube right now. I see it on the Zoom.
Damn, no, it's not showing up. Okay, yes it is. All right, it's good. Whew. All right. Let me get this link. All right, we're good to go. Let me just copy and paste this. Boom, bang. Actually, I'm gonna text it to you because I don't know if I can leave the IG live and text. So just copy the link before you jump onto the live.
Okay.
And then just paste it when you hop in.
All right.
All right, go live.
Wait, did you text it to me?
Yeah.
I didn't see it.
I'm gonna text it
again. Oh, I got it.
Okay. IG Live, what's up? Let me make sure we got this ready. Record to the cloud. All right. Let me know whenever you jump on, Cris. We can make this going. Telling more people to jump onto our channel.
All right, I'm about to join.
Wave back at check. There you go. View request. Go live.
What's going on, everybody?
We are live.
I think we have an echo.
Yes, we do. Hold on, I'm trying to fix that right now. Good, talk again.
All right.
Oh, good.
So we will be posting. I'm gonna post the link. I still hear the echo.
Hold on.
I'm gonna post the link for everybody. What's up, everybody? We're gonna do a special investing versus trading episode today. We're gonna do a deep dive on all of our portfolios, like deep dive, right? But we're gonna share something. So I'm going to comments the link to our YouTube episode so you all can follow. We'll keep the IG live on, but you're not going to see the information on the screens that on a Zoom. So
go on YouTube, everybody.
Yeah, I definitely advise you all to look at this via YouTube, but I'm going to post it here and I'm going to try to pin it. I think Derrick, you have to pin that one.
All right, I'll get a pin comment.
Sure. So we'll keep it on, but all the fun's gonna be on YouTube for this. And
yeah, you know what I'll do? I'll make a story and then put the link there too. So if you're not on this live now, you'll definitely see it on our story.
Okay. So I think hopefully we just covered all of the technical issues, and I think we're good to go on YouTube to officially start.
Do you hear any echo?
I lowered my volume, so I don't hear anything right now.
No.
Do you?
No.
Everything loud and clear?
We finally mastered it. Finally mastered it.
All right.
See, go on YouTube, everybody. Be sure to check out the story too. We'll put the link there, but the link is below. Click. Let's go to YouTube. Let's get into this deep dive.
It's pinned. Let's go. Let's get money.
All right. Heading out. All right, but we are still live on YouTube though.
We are. And maybe we can take a quick peek a little bit later on IG Live, maybe to invite some new folks. So we'll be back.
Sounds good. Sounds good.
We'll be back.
All right. So, Cris, as I am putting this story onto, putting the live we had or the YouTube link onto our stories, do you want to kind of, I guess, briefly go over what we're going to be talking about again? Just for those who have just joined our YouTube, sure. And I believe we do.
Sure. So first of all, welcome to the RiskReward. My name is Cris Mercado, aka Mr. Risk. And our co-host here is
Mr. Reward.
That is Derrick Stroman, colleague outside of this show, but also co-host of the RiskReward show. And we're here to find an upside in your life, namely in your career and any business venture. This is episode 4?
Episode 4.
And you'll see a few clips from previous episodes on YouTube. We have a couple of our pilot episodes on the RiskReward show account on Instagram. But this is a new venture for us, and we'll do some intros real. So again, for folks who may not know me, my name is Cris Mercado. I'm an award-winning social entrepreneur. I scale social impact via strategy, data, and product as founder and CEO of Grand Answers. I'm heavily involved in immigrant rights advocacy. My work and immigrant story has been featured in media outlets like Time, Forbes, and NBC News. And as far as the Mr. Risk, it sort of fits my personality. I like to test the risk before I jump in on anything, so that once I limit the downside, focus on the upside, just focus on the rewards. And I'll throw it to Derrick. Introduce himself.
What's going on? What's going on? I feel like as we talk more, you'll get to learn about me. But just to get things started, my name is Derrick Stroman, the founder of What Now Works, basically a talent acquisition firm for small to mid-sized startups looking to hire better talent and retain quality talent. I've started this venture because I had probably like 7-year stint in like human resources, where I was basically doing a lot of the talent, a lot of the HR placement, building out those talent pipelines. And my original goal was to really bring all of this, this info that companies have and bring it back to those who are seeking jobs. So when you're having like that what now moment, you're like, oh, I'm about to go into this new field. Like, what now? My company is basically the engine that kind of helps you get there and kind of helps you adapt to that change. So I've been pretty involved in this workforce field for a long time. Cris and I have done amazing things. I feel like we are just getting started. But what I like to talk about, money, workforce development a lot, HR topics, making sure people who look like us or, could get into, these tech spaces. There's so much going on within tech that I think we can all grab a piece of. So making sure that, me and Cris can really make sure that when it comes to you making that choice, you're thinking about the risks, the reward. So, but Mr. Reward is me. I always think about the positives. What are like where's like the ceiling? Like, how far can I go? So I'm going to give you, for me, on a lot of the things, like the upside of things. Like, hey, if you do this, this will come. But I'm pretty sure Cris is going to be poking some holes in plenty of my stories and dreams. And I'm happy that me and him are going to be going back and forth on this. So happy to be doing this with you, bro.
It's been a blast so far. And I'm not just here to poke holes. I'm here to fill them too. And I will, give you all, my takes on the rewards as well. Again, the mission here, help you all find the upside in your life. And we're not here, as novices. We're not just shooting a breeze here. We're really about that impact. We have the receipts to prove it. Whether it's my helping hundreds of low-income first-generation students go on to college, earn millions of scholarships, or the work that Derrick and I united in helping train tech talent, hundreds of Black and Latino tech talent, helping them get jobs in diverse tech industry, or that Derrick does again in talent acquisition and helping small businesses. Like we have the proof to kind of help you along your across your professional lives. But today we have a special episode that's going to center around financial wellness. So we're going to get into a bit of our own personal finances. Our main topic today is investing or trading. Right? There's a difference for that's right. No. And over the course of today's episode, we will actually deep dive. We'll do a screen share of our Apple portfolios. Right? So that'll be in our main segment, which is usually segment 2. But I think we'll start with our usual segment 1, which is our Risk Reward Weekly Rewind. And I'm going to start it off with sort of the GameStop, Reddit, Wall Street bets part 2. So we had part 2 last week. We had some of those popular Wall Street bet stock like Games AMC kind of have an uptrend. And I was wondering what your take on that was, Derrick.
I mean, the fact that it went up again, I don't think it's and it didn't go as high. I don't think it's something that's going to stick for long. It's really just a one-time thing. So for those who are thinking about investing or trading, this is not a bet for you to start with at all. Don't even touch it.
All right. So I will sort of second that. I'm going to sit this one out. This wave, I did participate in some YOLO trading. For the first iteration of Wall Street's GameStop pump. But I'm going to sit this one out, and I'll actually show you an article on my screen on how I approached the first go around, and I'll explain why I'm not touching it. And I think that leads us to maybe the second piece of our Risk Reward Rewind. And I know, Derrick, you wanted to talk about the Fed and Jerome Powell's remarks. So take the floor on that one.
I mean, more or less about the remarks, just wanting people to know who this man is. I feel like whenever it's not until I got into this investing mindset, really starting to listen to who are the ones that are in charge, who are the ones that are like making policies, saying this is that and this is that. So if they're talking to Congress or if they have some type of news like conference, just listen. They're probably speaking for probably like 45 minutes or something like that, but you can find clips of the important stuff. But it's not until I realized so Jerome Powell is the Fed chair of he's the Fed chair. He was elected in 2012, I think, by Obama and then elected again by Trump. So the fact that he's able to kind of create these policies to where the country is making money and the country is moving smoothly, the fact that he has support from both sides, like that's great. So that kind of shows you how like he's really about just making sure the money works. And when he talks, I feel like people just need to just listen to what he's saying, because he's always dropping gems of like, hey, you should put your money in this because the Fed is putting their money in this. or now the interest rates are, zero and they're not moving. And we're going to make sure that everybody has access to, just like capital. So knowing that, hey, if you're going to give people money, things are going to go higher. Some things are going to go lower. Like you'll see where like the actual, the money's going. But last week when he spoke, it was when the market just turned bloody. It was just it was just a bloody day. But when he spoke,
trust me, I know.
we all know, trust me. But when he was speaking, he was talking about the unemployment rate is like horrible. And in the bottom 25 percentile holds mostly blacks, I think Asians, and Hispanics. I'm pretty sure it's those three, but they were in the lower 25 percentile. So now that unemployment is still trash, like interest rates are not going to be moving at all. So you'll see people like when that happens, you'll see people buying homes and stuff like that, just because the interest rates are like very, very low. So things are starting to be, just like bought up, and companies are also moving too. So whenever he's speaking, or if ever you hear of him speaking, make sure to just listen to him. It really doesn't take long just to see where he's going, what policies he's making, what's happening on his end, because it will influence where you should be investing or trading your money into. So just being more aware of him, knowing like how his face looks, basically.
So he does move the markets. Can you let the people know out there how interest rates affect you?
Oh, personally? Well, I mean, I can talk about it personally. My experience with interest rates and knowing that it's at zero is when I purchased my investment property. Normally, interest rate, if you were to get a loan from a bank when you're buying a property, you'll probably have to put down 15 to like 20. The 15 to 20% of what the house is worth. So if the house is worth $100,000, you're putting down $20,000. But my interest rate was 2.5%, which was like, whoa, a crazy drop. So knowing that the world was going through some crazy, like the crazy virus and stuff like that, a lot of things were just going up, and people were started to just sell. So there was like the housing market was like very, very good when COVID first started, because people were just selling because people just needed cash. So I was able to pick up that, and I only paid, my interest rate was only 2.5, which was one of the lowest I've ever seen. So when it comes to, you investing, especially in the real estate, you would want to know about the interest rates, because that affects how you're buying and selling.
Sure. And, what trying to get into like deep dive interest rate talk, right?
Mm-hmm.
Or what the Fed does, but we will comment on how it affects us. I think as a whole, low interest rates push people towards buying and investing in assets.
Yeah.
And unfortunately, there are millions of people who are just trying to pay the bills month to month just to get by. So they're not going to be able to take advantage of these low interest rates. And, there are a lot of people that argue that a lot of income inequality has been driven by these historically low rates for such a long time.
Mm-hmm.
So we'll go into that in terms of our portfolios and why we have structured our portfolios in a certain way, why we invest in certain stocks or trade some options. So I think, again, you don't have to know the ins and outs of bonds, like the bond market and interest rates and the Fed,
Mm-hmm.
but it does impact a lot of what you do day to day. And it does impact, all this talk about generational wealth. So keep that in mind. We're going to do a call there. Like Derrick, I think I've gotten a few messages. I think we should get back on IG Live, just to let people know. So if you can get on the RiskReward media account. I'll get on my Grand account, so that we can, again, like invite people to take part in our main segment, which will be about investing and trading. This is going to be super in depth. I'm going to remind all of you, this is for educational purposes only. It's for informational purposes. This is not a solicitation. We're not recommending that you buy or sell any security. So I'm going to make clear. We're going to make that clear on show notes. We're going to make that clear on YouTube. We'll probably the same message at the end. And in fact, the way as we go through our own portfolios is, this is what I did. This is what I'm doing. This is what I was thinking. This is what I'm projecting. Right. So this isn't like, this is what you should do. That's not how we're going to frame this, how we do things. We want to empower you with different perspective, facts, and some opinions that we might have that hopefully helps you make a more informed decision, but one that you make for yourself, because you know what's best for your financial situation is.
Yes, sir. Yes, sir. I'm going to be telling you about the rewards.
Yeah. So we'll kind of get on the IG Live.
Yep, setting it up right now.
Again, so we want this to be inclusive, especially as we get to the main topic. Again, investing versus trading. Look, I know it's been such a kind of topic fairly recently.
We are live again.
Yeah, I've heard a few folks make some great money.
I've heard we've made some great money.
That's right. But I also heard who have lost some money recently, or maybe made some money and ended up losing it. So we don't want that to happen. We're gonna show you through we're gonna take you through our thought processes. So what we want to do is welcome back folks to Instagram Live. We're about to tackle our main segment, investing versus trading on YouTube. For the folks on Instagram, you're not going to be able to see the screens that we share. So I encourage you all to go on our YouTube. Derrick shared it on the RiskReward Media and to our YouTube. And I think you're going to get value by on screen. But we also want to make this accessible, so folks who be able to access YouTube right now or prefer Instagram, we'll keep it on so that you can hear what we're talking. Does that make sense to everybody?
Yeah.
All right. Folks who are watching, again, feel free to, write some questions in the comments. Let us know what you're thinking. But we're going to go to our main topic. So investing versus trading, right? So first, I'm going to tackle the idea of investing separate from trading. Two different things. Investing is long-term. Trading is shorter term. So Derrick, since you are Mr. Reward.
Okay.
What are the first things that come to mind in terms of the upside investing?
When it comes to investing, something that I always think about future self. When you are investing, you're not thinking about the money that you can get now. However, you're thinking about the money that you're going to touch 10 to 20 years later. So when I think of investing, I'm thinking of future Derrick, Derrick in 10 years, 20 years. And I would love to have an extra, $500,000. So the reward to investing is that, one, you will have it. It's a slow game. Like, don't expect the quick kill. This is a very, very slow game. And when you get to that point of like, all right, I'm at a good point. Let's see like what I made. And you're like, oh, I can probably trim some of that off and put it into this this next venture or something like that. And then now you have two streams. But I'm really thinking of ways like how I get started is to what are the things that are going to increase in value like over time. And I think when it comes to investing, I think people just have to also know that something that I figured out was the stock market is like you put your money in the stock market so your money can grow. Like that's something that's always going to go up. I think like if I put $100 in 2000 in the year 2000 and I take it out now, that $100 is probably like 1,000 right now, or probably more. If I would have put it in like Tesla or something like that, yeah. But when it comes to that, just basically thinking of your future self, the rewards is always there because the reward is that it's going to be in a win that's coming later down the road, but you'll be happy with extra money in your pocket.
All right. So I'm hearing generational wealth. I'll also throw in this idea of beating inflation. So prices are going to go up over time.
Yeah.
So you want your money to grow faster than the pace of inflation. So you're not essentially losing purchasing power. But you mentioned slowly. You mentioned you mentioned slowly and over time, Derrick. We're trying to. I thought you were Mr. Reward.
Yeah. No, but now the thing is that there are rewards of both. There are rewards of both. I've made some money from trading too, but I've made it's fast money.
Okay, so to complement what Derrick was investing, I'm going to throw in one big risk that folks might overlook. That money you put down to invest could be spent for more joyful purchase. In fact, we do that all the time. Whenever we buy things we need, that money could have gone to investing, but instead looked at like, you know what? I want the now, and I want the joy right now. I want those kicks right now. I want that chocolate cake right now. I want that shit right now.
Yeah.
Right? So that risk investing, when you put money to work in the stock market, that money could have gone for more joyful purchases. And that's something to resolve with yourself. I think Derrick and I have done a pretty decent job of knowing what our needs versus our wants are and why we choose to invest so much of our money and also time into the stock market.
Yeah. The people got to read.
So now let's yeah, definitely. So now let's bring it to trading, which is a lot more sure. So Derrick, what rewards do you feel from trading stock market?
Now you're talking about gambling. That's what trading is. Now you're talking about gambling. Gambling, that's how I think of it. The most recent reward I've seen was CCIV, Churchill Capital. I put in probably like 200 when it was like 15, and it grew to 60 per share. So I tripled my money. So being able to kind of just get that reward, like it was probably like in like a month's time, but in a month's time, I made triple my money. I took it all out and put it in something else. So there is a huge like reward when it comes to trading. You just really have to figure out, is this you just have to bet like really well. If you like to gamble, this is for you. This is what this is. You are running off of news. You are running off of, charts, people, what rumors are going around. And if it's a good bet, you win. Just don't get greedy. That's the only thing I will say. And I hope you have something to say about people getting greedy in the stock market, Cris. That has happened to me plenty of times. I'm like, yeah, no, this stock can run up just like, some more. And then it goes down horribly. So Yeah.
So what I'm hearing here is trading has that excitement,
that rush
component, right? It's that rush. So it's not just the quick money that can come trading. It's the rush behind it. It is the same sort of dopamine and adrenaline that might come from other very primal urges, right? It satisfies that desire, right? And it gets you that dopamine fix. So that's definitely a reward I have. But I'm definitely going to point out, as Mr. Risk here, that rush can get you into bad habits that can cause the loss of money, either on a big bet, small bets that add up, and then the type of focus that you to do things like trading, you're losing so much time and resources. Again, opportunity cost here. So that time and that resources and those resources could have spent on other ventures, like say another job or like your business. So you're safe from other things by focusing so much on trading. So those are the risks I see to trading. And I think we've given a pretty fair perspective on both investing and trading. If down, Derrick, are you more of an investor or are you more of a trader?
I want to say 80% investor, 20% trader. Just because, oh, good catch. Just because, yeah, so 80% investor, 20% trader. Because I know I can get that quick fix of dopamine from trading if I just pay attention to what's happening. I do, when it comes to investing, I'm going to recommend a book to everybody. I pulled it out. The Intelligent Investor. I haven't read the full thing yet, but you see there's tabs here. But this book really teaches you that one of the, even though I'm not done with it, one of the earliest things that I've learned from it is to remove emotion from money. Like, don't have any, it's just paper. Don't have no emotion tied to it. So I take that, that mindset in terms of like when I'm investing in companies, just because I know this is going to be a good company. I see that there's money going into like this field. There's more jobs coming out. There's more, other hedge funds are buying this. So that's like a good thing for me. Like, hey, if, this person's buying it, I should, look into this. So that's how I think of when it comes to my investment strategy. Just really, just looking at what's coming up, who's doing what, and just putting my money there. But trading is also 20%, like I said. I feel like you have to be very active with that, with like what's happening. You have to always constantly read. CNBC is like the channel that I watch. Jim Cramer is one of my favorite people. Him and the Downtown Josh, two of my favorite people, always dropping gems. And it's funny, like when they're talking about, oh, like I'm investing in this, I'm doing like steel, I'm doing like precious metals and stuff like that. You're like, oh, I should be looking into this too. And then that's when you start to kind of see like the bigger field. Like you start with what you know, but when you gather all of that info in, like it just opens up, like the sea just like splits apart. And then you see everything else. You're like, oh, I should put my money in this field right here, or I'm gonna, dabble in this. And then that investment kind of builds up because now your money is in different places and all. So that's the mindset behind the strategy that I take with investing. How about you?
So I'm going to say I'm 80. I think I may have gone to 75% investment, 25% trading over the last couple of months, ever since I started to learn how to deal with options.
Yeah, you gotta teach me that, man.
I'm learning myself. So I think I have changed a little bit, but overall, again, my name is Mr. Risk, and that's what I am geared towards looking into first. So with that in mind, everybody in IG, get on YouTube, because we are about to go in depth with a screen share of my resume. Sorry, not my resume. I'm sorry. I've been doing so much career right now.
So much workforce development. That's what you've been doing. That's the groundwork you putting in, baby.
So we're about to do a deep dive on our portfolio. So I'm gonna start off with a screen share.
Ooh, if you're on IG Live, you can't see this.
Yeah, I'm kind of scared on this. So, I think it's gonna come up right now. So I'm looking at the.
I don't see it though.
Screen share.
Okay.
Hold on 1 second. I just want to make sure it gets the right window, because I have multiple windows up.
Yeah, but I'm very, very excited to see this. Definitely, wanted to hear, how you thought about these trades, why this, why that, why not this. Just dive into that, that brain of yours there.
Okay, so actually, hold on. I have a privacy set I have to change to allow Zoom to see my screen. Yeah, so can you do this one first? I don't know why it's not. Yeah, it's not letting me change the thing right now. Hold on 1 second. Right. I'm gonna have to quit and then come back.
Okay, do that.
All right. So,
and this is our first commercial break. All right, IG Live. What's up? What's up? What's up? Let me just get my stuff ready. Where's it at? Where's it at? Where's it at? I think I need another USB also. So right now, Cris, I'm working off of the iPad. So let me see if this all works. I'm sorry, computer. Oops. Let's check YouTube though. Any questions we got? No questions yet. No comments. That's fine. That's fine. People go and come onto the IG Live. IG Live. As we got no questions yet. No comments. Okay. All right.
So we're gonna this another try. Hopefully, yes, it's all good. All right. Let's get to it. Let's get to it. All right. The screen has been shared. So my portfolio here is going to from my LinkedIn post to help announce the episode. So first off, look, anyone could have gotten lucky over the past year or so. Mm-hmm. But this is my track record, so I'm going to claim that I'm not just lucky. So if you look over the 1 month, 3 months, or 1 year, 3 year, or 5 year time frame, this is my performance above the bright green line. And if you compare it to typical benchmarks like the S&P 500, I am dominating, right? And again, I'm someone who has taken only one business course in my entire life, and that was in grad school. I didn't really have members who taught me about the stock market, self-taught. So I learned a lot from folks that Derrick named on CNBC. I turn on CNBC every day. I've done it past 7-8 years. So yes, Jamer, Josh Brown, even away from CNBC, The Compound, I consume all of those shows. But when I think of CNBC, think of like Halftime Court with Scott Wapner, and I think of the investment committee members and the contributors, like Karen Feiner, who's my favorite. She has a crush on Jamie Dimon, CEO Morgan Chase. As much as I have a crush on her, she's so like balanced in her view and I just gravitate towards that. Steve Bravo is another one. So many folks on CNBC. So shout out to them. I've really learned so much from them. So I will claim I was a bit good, not just lucky in outperforming typical benchmarks. So I'll start off with that. And then I'll go into, okay, this is what portfolio performance has been over the past 5 years. And then I want to reflect on, well, what is my mindset? So as Mr. Risk, these are the 8 questions that come to mind first. So one, before I even put any money in the stock market, before I even think about stocks, to what degree do I have my basic necessities covered? Whether it's rent, bills, like, do I have that covered? Right? And I do, right? So single, I live alone, have a nice apartment, but I got rent paid for already for the next several months. Even when I have to re-up the lease, I'll have enough money covered for that. So that's what I think about. And then what happens if I have an emergency? How much in emergency do I easily have available? It's like, okay, I have enough to cover anything crazy, right? I do have some insurance to cover any crazy medical bills. So I feel a bit at ease on that level. And then I said about, well, how much can I put away from my portfolio when I take into account my spending habits and my savings habits? Okay. And then when I get to number 4, I have this set of money. I'm going to put it in my account, various accounts, individual tax deferred accounts. And then I start, okay, why do I want to own a certain security? Why do I want to own a certain options call? A certain call option. That's pretty much all I do. Options market, buy and sell calls. And once I figure out buy or what I want to buy or own or rent,
rent.
Then I start to ask myself, right? So which are the ones that are invested? These are buy and hold for longer term. And then what I would do at certain stocks or options, like what are the trades? So that way I can separate them and still be on lines of, okay, I'm, like Derrick said, 80% investor, 20% trader, right? What makes me feel comfortable? And then I might take a dive on like what might look like. So I am fundamental first. I ask myself, why am I owning that? There needs to be a thesis behind it. And secondarily, I'll look at some technical charts because a lot of the action that you will see in the market based on charts. right? And the way I look at it is, okay, I'm buying this, but the price that I'll pay for it, I might rely on the charts. And then I start to think about, okay, now that I see some certain price points I want to get in, all right, what am I willing to risk for? Am I willing to go down and still hold? When do I cut my losses? When do I hedge in? That means like put in money, right, to bring that space. So these are the questions I ask myself pretty much every day or every week, just so I can reset my in the right time frame, mind frame. So I'll go to my portfolio. So that was my portfolio performance. I'll give you some individual holdings. So one of my best winners is a Canadian cannabis stock called Afria or Afria. It is, I've had it actually since it was sub $5, right? And the reason my cost basis per share here, it's still well below it is now. I think it's 18 and change. Ooh. But I actually paid like under $5 for this. I want to say close to a year. And it's a buy and hold for me. So one, how am I thinking about this? Well, one, the legalization of cannabis is going to be a wonderful opportunity for investors. It has been already. But the thing is, I found it hard to figure out which company to invest in. And there's an ETF that is amazing, run by Tim Seymour, who you'll on CNBC. And, you know, I was looking into the holdings of his ETF and after one of them. And then because I paid attention to the stock market, I found out that Afria was led by Erwin, who's CEO, but he had actually run Hain Celestial. So if you know like Celestial teas, and I'm a big tea connoisseur, I know Derrick is too. So I had known him from then, and I know that, you know, he's pretty bankable, and he has experience in the packaged goods space. And if I'm thinking, okay, cannabis is going retail, it's going to be legalized in the US, I'm like, you know what? I think there's factors in that makes me best long term. So I did. The reason my cost basis per share is over 7 is because I traded around. So I'll pull up the chart app right here, right? So I'll look at the chart. I probably money around here, right? So, and again, I when I look at charts, I go simply to Yahoo Finance, and I see this run up, right? But I've been here, right? And then when it got to here, like a while back, and a while, a while meaning like a couple of weeks ago, right? I was like, I tried to sell and I missed it. It actually got as high as like 30, 32. And you'll see this on Yahoo Finance, because you'll see the 52-week range. It hit 32, right? And I was trying to sell and I kept missing it. And it dipped down to 16, right? And I was like, oh, it was cut in half from its all-time. But what I'm bad for are the people who got in here at the 30s, right? And I know the Wall Street Bets crowd, like Afria was one of the stocks being talked about in the whole cannabis space. But I feel bad for the people here. We don't, like, the reason we're doing this particular episode, we don't want you to be up here, but
don't buy at the high.
It's not like you can tell what it is, but there are ways in fundamentals as far as earnings are concerned when buying up here. That's obvious up here. And experts told you that too. I sensed that. I tried to sell, but actually was I ended up selling about a fifth of my position around here. So I missed it the first round, right? I was like, I'll wait for a bump. I'll sell here. So I did. And then, we got hit over the past couple of weeks because of interest rate fears. And I'm guessing people took profit. So what I sold here, I bought back kind of here, actually a little bit lower. So I bought it back. And then when you see what the price is now, it's from that second buy point. But that's my cost basis is above 732. I locked in some profits here. I bought a little bit back. I bought it back. But mine is still in the sevens. So essentially, and I remember buying here, and it's one of the largest positions in my portfolio. So I'm good. I'm good on one. And this is how I was thinking about my investment here. And I'm still long and strong. Like it may not be my biggest position now. It once was, but I'm still long and strong. And I'm rocking with it long term. And it's one of those where, if I get a hit 10%, 20%, I'm good because I'm over here on this chart. I'm good. I can take pain. I'm good. And also don't want, it's also in a tax deferred account. So I don't want to take the full tax hit by locking in profits, especially when I have this long-term view.
Yeah.
Right. And I'll get into a couple of things in my portfolio. So 10 cents. I wanted to, but it's not 10 cent, the parent company. It's actually, it's a spinoff. So it's 10 Cent Music. So think like Spotify, but the Chinese, right? So I wanted to diversify because I wanted to go outside of the US, right? So that's why I owned that. And I owned it because of, again, diversification, but also saw that Ray Dalio, one of the biggest names in Wall Street, in hedge funds. So Bridgewater Capital, he saw bargain, and I've had it again. I've had 10 Cent Entertainment since it was 18, and it's currently like 2025. So I'm good with that. Now I'm gonna get on to DraftKings. So DraftKings, Derrick and I both own.
Yes, sir.
Man, I've been on this. Like I stock market for so long, I know it by heart. So I know stock symbols by heart. So DraftKings, and I'll admit, I got in earlier than I wanted to. I was buying it here, but I didn't get there. I got it in like the high 30s, and I've been trying ever since. I regret selling maybe 25% of my position and not buying it back. But I'm good. And recently it had earnings, so I'll take 5 days, right? And I'll take it back 5 days. So I've been holding it since high 30s, and I trade around again. When it goes up high, I'll sell a little bit of it. If it comes back down, I'll buy it. If it keeps going up, I either have to chase it or I'll take the L. I'm like, I sold a little bit too early. But I wanted to play the earn, and I had a position. It wasn't a position there, but I was like, let me try buying some call options. So I had 2 call options. So I actually bought a short gun, which I sold. So that's why it doesn't show up on my account, because I sold it already for 200% gain. But
only 200.
Only 200%, right? And that's the beauty of options. It's the curse. It's exponential. Like it's super risk, but it's also super reward. And when you do it by just buying in options, so when you buy options, how much max you can lose. It's the premium pay, but it's unlimited reward. The thing is, buying options is all the least probability of you making a profit. So that's the other thing you have to take into account, because you just can't be a little right. You have to pretty right or like very right. So apparently I was very right on the short term, but I also have a longer term view of drafts. That's why I own it in stock. And that's why options that also go into April. And the reason why it's in yellow is I had like a bunch of contracts. I think it was like 20, and I sold half of it. So that's sold half, and I kept the rest. And again, good gain.
Mhm.
So, but I still have some left for more gains. And I have options like this. My biggest position right now is U.S. Steel, letter X.
Mhm.
Um, and the reason is, look, we are in a very unique environment where cyclical stocks that are related to that are mostly associated with financials, industrials. So X is U.S. Steel. When you think about Biden and the infrastructure plans, and you
Mhm.
hear like the billions that's in store, well, when you do infrastructure, when you're building stuff, you need steel.
Yeah.
And I know that in the latest report of U.S. Steel, so the letter X, like they had some bullish, positive things to say. They had a good outlook. But I had it and I sold a little here, but it took a
Mhm.
greater, and instead of bailing out because I had a long-term view, I bought more. And I didn't just buy more stock, I bought more options. And again, I 40% in some options here, and I have this 20% profit here. I'm holding a little bit more, maybe a couple more weeks, and I'll try to sell those in a greater bump up. So this is I've been thinking about my portfolio. Not more wins. I got some red here. I got a loss in, well, it's small in terms of the notional amount, like the actual amount of money that I put in, but it's actually I have options that are like a 80% loss right now. Um, but I make that these trading opportunities that I see, none of them are beyond 3% of my entire portfolio. And this takeaway point I tell people,
Yeah.
look, I could give you all the stocks and options all you want. You're not going to do with them unless you have a plan. And that's why Derrick and I are going through this, how we do it, how we think about it. So if you're out there asking, what stocks should I buy? What options should I buy? What strike price? Like, that's developing in the long run. This is about the habits and how you manage risk reward. This is one of the core tenets of why we started the show. We wanted people to make smarter decisions, not just grab things. And hopefully you'll see how we minimize risk and maximize the upside. Like, you'll make better choices. And also for your portfolio, let's do some quick math, right? If you did something crazy and it didn't go your way and you lose 50% of your portfolio, in order for you to get back to that same place, you have to double your performance. You know how hard that is? So to think of this finite game. This isn't like a football game where like there's a winner and a loser. This is it. This keeps going. Your job is to stay in the game. So on solo, because those are the ones that are going to destroy your portfolio if you and you can't get things right all the time. So like Derrick said, you get rich slowly. And with that, I'll pass it to Derrick.
Yeah. Few things that you said I just wanted to touch upon. When it comes to investing, like you said earlier, you were basically looking to see what these other hedge fund managers were doing. And that's how you kind of gauged where you should be putting your funds to. So if you're new to this, that's one of the easiest things that you can do is just follow where money is being put. Like I feel like if there's like any like crime movie, you always follow where the money is coming from. That takes you to the bad guy. So same type of mindset. Follow the money, see who's putting it in into what. Also, something else that you said I think is very, very key is something that I need to do more of, that I have been doing more of, is selling when the stock is going up, yes, but also know that it's going to go down. And when it goes down, you buy it at a cheaper price. I think that's a habit that I'm starting to do a lot more of, just so I can build my position in any company that I own. That's another thing. I wish that we can have like the physical stock. I feel like if we were able to hold like that physical stock, it'll be so much easier. Because it sucks when you lose something that you're actually holding, but um, just know that you own this company. Like you are a partner of this company. So whatever this company does, like you are a part of it. If this company's making money, you are entitled to that money. So really thinking like that, I think, is very important when it comes to um, training your mind to think long term. I'm gonna put my money here to do this, but I wanted to kind of share something with you all. Give me a second. So I wasn't able to pull up what I own, but I'm gonna show you how to look at it on Yahoo Finance and what was my mindset behind it.
Definitely want to let the people out there know, like, you can learn this, but it takes a discipline,
Yeah.
and it becomes a habit.
And like options is like it's like another like convo, but for anybody who's thinking about options, make sure you know what you're doing first. Like don't just go into options blindly because you hear people talking about options. um the point, like when you put your money into an option, the point of it is the point of your dollar is to hit zero. So if it goes up, that's good, and it's based on time, so you have to be right within like a certain amount of time, and if you are wrong, you lose money.
So the concept is called time decay, and it is another factor that adds to the excitement, but also the risk of trading up.
Can you see the screen, Chris? Carvana. So, for those who don't know what Carvana is, it is your car vending machine. Uh, to be very honest, this was the first stock I was like, you know what? I need to invest in it because I understand with COVID that really showed like how the world changed. Like we went to like this virtual space and people were on their phones more, therefore, and people couldn't go out, so they had to order stuff via phones. The car is the exact same thing. People started to order their cars via phone. Carvana is unique because now they have multiple stations. Like they drive the car to you. Like that is customer service, and I feel like this business is based off of customer service. So knowing the fact that they were doing that, they were opening up more shops, um, and just knowing that the population was moving towards this, this touchless world. I was like, I'm going to invest money into Carvana because that's where I see things are going. It was, I want to say it had to be, uh, it was one point where it hit. It was during COVID. I'm pretty sure it was during COVID, where, yes, Carvana was $55. $55. And if you just waited a year, you'll see it at 311. So when I first saw this, it was a little bit after COVID, and I got in around, I want to say, it was like, it was a little bit before 215. It was probably like around like 180-ish. That's when I got in. Um, ooh, what's going on, Yahoo? Okay, fancy, 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 fancy coming up. But yeah, so I got in around 180, and from there, like just knowing like with what I was going with, what my thought was before, just knowing that hey, this stock is going to go up, um, just held it. When it dipped again around like, where was it? Around like here, That's when I bought more because it was around like earnings time. So I'm thinking, hey, and that's like another thing. When earnings are coming, you should expect stocks to just move. So just pay attention. It took me a while to figure that out, but once you hear like, hey, this quarter you have these companies earnings that are supposed to come out, you'll definitely see like a run. So being more aware of that. And then you have Carvana just going up, going up, going up, and I just held it. I haven't bought any recently when it crossed like 200, but like I doubled on what I made so far, so I'm happy with just holding that. Another, you was gonna say something?
Yeah, I wanted to add. So
Hmm.
when we say going up, if you notice all the jagged lines, so it doesn't go up in a straight line.
Hmm.
And I just want to remind that. So when people say, "Oh, stocks up," not not in like a very calm straight line. Like it is a roller coaster ride a lot of the time.
Hmm.
But if you think long term, it just goes up. But if you are doing the trading, it is definitely doesn't feel like, oh, stocks
Yeah,
just.
I feel like something to add to is if you're not comfortable with the stock moving up and down, don't buy it. I think that's a very like if you're going to invest into something, you better expect it to have its highs and its lows. That's how I feel about the Knicks right now. We had a very horrible run, but now they're looking decent, and I'm happy to be a Knicks fan. And I hate all the bandwagon people now.
By the way, I'm to investing in Madison Square Garden properties.
I will too. Yeah.
The
Dope.
stock has had a performance actually.
What's the ticker?
If you type in MSG, I think it should come up. There you go, entertainment.
Okay.
And this makes sense for everybody else. We are nearing reopening. Go get vaccinated so we can be outside, having fun, saying what's up to one another in person. But if you think of the reopening trade, Madison Square Garden is one of those.
Mm-hmm. Where was it at? Let's see. So now that so I'm glad that you brought this chart up, and I'm glad that you mentioned this because now I'm really doing what I would do. I'm looking at the chart, seeing where the lows were, where the high was. Like I'm looking at this green candle, knowing that it was a very high volume day. Looking the lows, the highs. Something that you mentioned earlier too was when you look at the founders. I feel like if you're going to invest, also do some digging into the actual whoever that CEO is. People invest in Elon Musk just because it's Elon Musk. Like whatever he does, he's going to have a crowd of people that are going to throw billions at him, so he's fine. But they're throwing this money at him because they know that he gets stuff done. So thinking about, hey, if this person did a good job here with like making teas, they'll definitely do a good job here. So being more mindful of looking at to see who like that team is. So I don't know who the team is here at Madison Square Garden, but by looking at the chart, you do see these like this uptrend here. Then what I'll do next, just so we can kind of just show you some insight into what I think about or how I do things, look into the financials. You get to see if do they look profitable over years. You have to expect this to happen because of COVID. But before that, their total revenue, you saw it was going up. That's a good sign. You could do some more digging by looking at the balance. Well, I'll go to balance sheet. Uh, I'll look at their assets, their liabilities, what they own, how much debt they have, and it really goes into just taking a deep dive into looking to see if the numbers make sense, looking to see if this is a company that's growing or is this a company that's losing money. So going through literally almost all of these lines here is what I would always do before I put any type of money into any type of company. I'll also look for news, like if there's any news that happened, or I'll probably check on like something like Market Watch. I believe, I don't know if does Yahoo have like a news section or no? Because I know TD does.
So when you type in the stock ticker, if you scroll all the way in the bottom, you'll see news articles, and that's where you can get earnings transcripts.
Oh,
So
yes.
so that's what I do. So
It's right here. Okay.
there it goes into the financial. I do via the earnings transcripts. So I love earnings season. It is risky during earnings season, but I like delving into what the CEOs say, because sometimes the results themselves won't capture. I felt Weight Watchers,
Mhm.
the results weren't that great. And if you got scared, you would have sold at like 24, and then it reached pretty much near 30.
Can I just add something quick? If you're ever searching, if you don't use Yahoo and you just want to search it quickly, you'll put the name of the company and the investor relations, and whatever company it is, you'll go to that page. The reason why I chose Snapchat was because Cris mentioned it too, like reading the earnings reports, their 10K reports, their annual reports and stuff like that, just to see what the company is doing, because they'll definitely be dropping gems and like, hey, we're putting more money in R&D, or we're putting in more money in marketing, or we're going to be doing this and doing that. So that lets you know where the money that you invested in is going towards. But you, when I think of Snapchat, I don't think of them as, I think of them like as like a social media, outlet. But as you can see, if I go on their investor page, they're declaring themselves a camera company. So it just kind of gives you insight. From what I know to what Snapchat actually is, now that I know that they're like a camera, some type of camera company, and it gives you the amount of daily users, uh, how many opens per day. They go into detail on the like who, like when it comes to marketing, who are they going to be working with, and they have their slides here. This is dope because it wasn't like this before. But you can look through their slides here, see 9 years of innovation, and they go through everything. So that's really, I feel like when you're going to be thinking about investing and or trading, just being in the getting in the routine of just checking and reading stuff beforehand, that's going to be key, because you don't want to put your money in something that's going to die out.
That makes a lot of sense. So this is part of the fundamental research that we do. As home game, again, we're not pros at this, but we can do pretty decently by doing the homework. I was wondering are you still sharing your screen?
So I'm trying to get a. No, I'm not sharing it no more.
I'm gonna share mine again. So I'm gonna put a doc that I had texted to you.
Which one?
So I don't know if you remember this.
I'll tell you if I bought it or not. Yep, I bought it. Yep.
So I think this encapsulates how crazy the market can be, and why you need a fundamental thesis to hold on to, why you need to pay attention to technicals as well. So I've held Jumia, which is branded as like the Amazon of Africa, although it's headquartered, I believe, in Germany, right? So I think I held Jumia since it was here, right? It was around 10, and I decided to buy 600 shares there. About 600 shares. It might have been 800, but it was a lot. It was a lot for me. And then I was like, you know what? I'm just gonna leave this alone. It was a hot IPO. It came out in like the 40s, right? And I was like, you know what? The Amazon, when I think about what Amazon did, when I think about how untapped Africa is as a whole, I'm like, okay, let me put in some money that I'm willing to lose into Jumia. So I put it at 10 and then wait for it. It goes down to the lose, right? So I want people to start thinking, okay, how do you feel if your investment in the thousands just got cut down, right? In way more than half? How would you feel? What are you going to tend to do here, right? Do you just leave it, right? Or or like, you know what, whatever I got, I'll just pull it out. Like I can't trust it. So fine, I left it, and then suddenly in the panic, right, it got a bump up, right, and then I sold a little, and then people started to really take notice, and it was heavily shorted at once, and then the one of the big short selling firms made the decision, like, this is not the one to short sell, this is the one to buy in a pandemic. So they do payments, right? They do. So Jumia has payments. They function as like the Amazon, so you can buy stuff from third parties, right? Have things delivered. And then it skyrocketed. So I held on. My discipline was to sell as things go up a little bit. So I sold little by little, right? Now you can criticize me. Well, you should have just held on to the whole thing, right? But you know that's gonna happen. So I executed on my discipline. I sold little by little, and I still hold about 2 shares up here, right? And if it dips a little bit further, I might buy back some of the stuff that I sold. But I also want you to know that around here, right, when I started to sense something was brewing, I bought options. And those options, when it reached here, I believe it went up like 350%, and I sold those, right? Now, I could have gone back in because obviously it went up much higher, and maybe my original option position gone into like the 1,000 cents high. But my discipline says, don't be greedy. Don't be that greedy. Go take that profit and let's go invest it out. And I don't regret it today. And I was saying Derrick about it this around these times. Yeah, you like Derrick, eye out for it. I wasn't telling him to buy. I knew he was gonna do his own due diligence, so I didn't pressure him to do anything. So for those of you who are pressured from your peers, like, no, you have to do your own homework. So that's my take on what is actually my biggest winner as far as the stock market is concerned.
No lie. Once you told me Amazon of Africa, I was like, instant winner. Instant winner. Instant winner. But yeah, this has been like a good like, thank you for shouting this out. The fact that you're in, I was like, okay, if Cris is investing time, let me take a look at it. I like what I saw. It made sense. And I got in probably around like $12, I think it was. But I've held it ever since. That's something that I just knew that over time it will grow, because if you're being declared the Amazon of Africa, like that's big. Like you are, you have the logistics games on lock. So that's where I put my money towards, and it's been a good investment so far. And there's like, they can only go up, honestly and truthfully.
So there's still, again, they're young company. They still have a lot of out, but risk is being rewarded in this market. Growth and or steps that folks are taking towards growth is what's being rewarded. It is highly priced here in terms of like valuation, but that's also still being in this market. So again, I have money that I can lose still in here. It's in one of my tax deferred accounts. But Derrick, since you bought this at the 12s, Does that mean you're gonna take me out to a celebratory dinner
For the plug.
with the profits you might take? Because we have found upside in Jumia.
Yeah, right now we're playing with house money, so it's all good. We're playing with house money right now.
And what we really want to do. So we want to take off our cost basis, like the money that we put in, so that our money is worth us going forward. And that's our
Yeah,
approach to it. That's what a lot of investors' approaches to it.
yeah.
So I think that brings us to like one of our upcoming segments, which was one of the questions that we got. And so I want to reflect on this a little bit. So one of the questions that we got as part of our open office hours is sort of like, why do we choose stocks to invest in? Because they were told to just invest in ETFs or indices. So Derrick, can you talk? I mean, we heard about why we invest in certain things and our thought process, but why do you use individual stocks or securities as opposed to index funds or ETFs?
So I do for some stocks. For some funds I do hold a lot of the stocks that I hold. I have like the single stock too, but not. I don't really do like a bunch of funds. I rather the company itself. But I do have like probably like one or two funds, ARC and QQQ. Those are the two funds that I have. So and I see that as like double dipping, kind of, because if the fund is going up and I have the stock too, that means I'm getting money from like both sides. But when it comes to choosing a specific stock, if I believe in the product or whatever service it is, if I see there's like a boom in this in this oh, the live just went off. All right, that's fine. If I see a boom, I'm definitely going to invest in it. If I see other people that are putting money towards it, I'm going to invest in it. Like, you see so much money going into anything that has the smell of electric vehicles. Electric vehicles is going up. Ford is crazy high. CCIV I think it hit like 60, 62 or something like that was like its high, and that's based off a rumor. But the fact that it had electric vehicle tied to it, that's why it had that run. So looking at specific companies like that, I mean, there are thousands of companies, like thousands, probably millions. But start with the ones that you know. Like, if you have an Apple iPhone, buy Apple stock. Something that Jim Cramer always says is never sell, never sell Apple. And that's how I feel. Apple is one of the first $1 trillion companies, so they know what they're doing, I think. So that's how I've started off with what I know. JetBlue, I fly JetBlue. Oops. Okay. JetBlue, I fly JetBlue, so that's why I had that stock. Other things like that, like whatever I use heavily, I'm going to be investing, because I'm like, if I'm going to spend money for this service, I would want something back from it. Another thing I look at is stocks that give back dividends. It was one, like when I first started, I only put my money into stocks that gave me, just like money back. So I had a whole bunch of REITs. And the cool thing about dividends is that you have stocks that give it every month. You have stocks that give it every quarter, twice a year, and every year. So one of the REITs I have, STAG, they give you a dividend back every month. So that's money coming in every month just for me putting money into this company. So I think that's a great way to kind of start. And when it comes to choosing those single stocks, how do you go about when it comes to like choosing stocks? Like, what's your thought?
So again, big fundamental themes. But my name is Mr. Risk, and my portfolio, based on my brokerage account, is actually categorized as aggressive growth.
Mm-hmm.
And that's how I pinned it. So I want it. I'm fairly young. I have some time to make up for. And I think that in a time where interests are historically low and we are seeing this upturn in the economy after the pandemic, and we are thinking about cyclical stocks. So I own oil stocks. I own US Steel is my biggest position. And I've had that since that was in single digits too, and it's near 20 now. And I own a financial first regional financial First Horizon Bank. So when I think of what I'm playing for, I'm still heavily involved in tech. I own AMD. That has been one of my biggest. Also, I've had that since that was like $14 per share. But what I did is like I traded around, and I think I went from like 40 to high 30s, and I missed the 30s to like 50s. So I missed some there, but I got back in like high 60s, 70s, and I'm still long and strong there. But I'm it's a little bit less tech now and more into those industrials, cyclicals. That's what I'm playing for. And again, I'm reading this. Yeah, well, I'm reading this from what I'm seeing in the market and all the nuggets of advice that I get on CNBC. So this isn't like accidental. I might scroll through Wall Street or Twitter once in a while to get a few ideas, some quick trades. But and I have been trading more because of options. But for the stocks, I've been trading the stocks so far less, because now I have these small positions in options that get me my links, get me that rush, right? And I just leave the Afrias, the US Steels alone. And when you trade less what you're gonna be better over the long term.
It's funny to hear you talk about options because that is the biggest risk of them all.
That's why they call me Mr. Risk. Sometimes Mr. Risk can become Mr. Risky.
You never know. You never know. That's what's up. That's what's up. Anything else you wanted to add to that question? Are there any funds that you like?
So I follow Kathy Wood and ARK Invest, but I look for individual names because, again, it's a bigger bang for my buck. Just know that because it was aggressive growth, I know that in terms of like what's called beta, I know how much my portfolio moves. So last Friday, I was down 5 figures, right? And, maybe that might some people, but I've been able to manage both my risk reward and my emotions to that risk and reward. Because when I saw that loss, like, I'm still that far off from all-time highs. And then today, really good day, right? And I'm like, all right, I got the 5 figures back, right? I'm good. And I know that when the broader market indices like the Dow or like the NASDAQ moves, let's say 2%, I know, because my portfolio is structured as aggressive growth, I know my portfolio is going to move double that, 4%, right? So that's 4% to the upside and so 4% to the downside. And I'm okay with what I have because I've done the homework, and I still have positions where, unless something absolutely crazy happens. So my biggest position, US Steel, right? It can go to 0. And I'll be like, that kind of sucks. But I'm still very much in the game.
Yeah. I think when you start to, I guess, do this more, you learn your first lesson when you lose money. I think that was the moment where I was like, oh, I lost a couple thousand today. Nah, we can't have that. It was like, we can't be doing that. I need to make sure that if I'm going to make this back, I got to make it back. Because to see, for you, you can have one horrible day. You mentioned that you lost 5 figures. I lost a couple of thousand before. And I'm just like, nah, like that's not supposed to happen. So once that happened, that's when it clicked. Like, if I'm going to invest, I gotta be sharp. I gotta be on point. I gotta know what I'm doing because I can lose everything, and I'm not trying to lose everything right now. So really changing that into like that, that mindset, just going into like I can't, like, I have to do this.
Something back on what you said. Something you just said. You said, "Nah, we can't have this. I got to make it back." You know what? We can't make back some trades. Mm-hmm. It's done. We were wrong, so we move on. Yeah. You cut your losses. Move. Right now, I broke that rule. That's why I'm down 80% on a small trade. I was really wrong. Wrong is horrible. My rule was, all right, 20% is like, once I get there, I got to start thinking of things. And as far as options are, this 40 to 50% range, like, all right, let's cut our loss. Let's move on to the next trade. I was stubborn. I broke my rule. I'm down 80% on this one. That one trade is, again, not more than 2 to 3% of my entire portfolio. Mm. So it doesn't really hurt me. I'm still 3% all-time highs, which is just like a week ago. And again, it's because I'm playing this, I know infinite game, and the rule is find a way to stay. You're gonna have these streaks, but you just cannot afford this one huge loss on your, or a series of losses that accumulate into one huge loss in your portfolio. That's what you're trying to avoid. Mm-hmm. And if you think long term, if you have decent rationale for your stocks, your long-term investments, and if you have this small trading focus like I do as well, again, that gets the excitement, but it's not going to destroy my portfolio in case things go wrong. That's how I approach it. And I'm not saying, again, that's how I approach it. You can choose to do it however you want to. Just please, like, let's as Mr. Risk, let's minimize the downside risk so that we can just find the upside and concentrate on those rewards.
Get those rewards, aka get the bag, secure the bag. Do you want to move on to the right move right now?
So,
what are you thinking? What would you do right now?
Yeah. So for those who are new, our last site is one piece of advice as far as the right move right now. And again, theme on financial wellness. And again, this whole episode talking about stocks and options and how it's for educational purpose only. It is to inform. We do not recommend buying or selling any security, right? We're not soliciting anything. We're not even selling you a financial product. We don't have one to sell. This is purely because of so many questions that I've gotten. I'm in some Facebook groups that deal with investing, and sometimes I get questions, and I wanted to tackle it in just one shot, and Derrick wanted to do this. Like, we want to look out for our friends, our growing audience. So this is why we're doing this. So the right move right now isn't going to be buy a certain stock. Is it going to be look into a certain call option? It is go find a financial advisor. They will have all the tools to help guide you so that you are better off over the long term in terms of your personal finances. Go find one. That is your right move for right now.
I want to just give a shout out to Andy. Andy was the financial advisor that I met before, and I probably had like a handful of meetings with him, but every meeting he was like he told me the truth, and I feel like people's emotions are all so tied up with their money that when they get told the truth, they're like, nah, like that's not true. When like, yes, like this, look, you bought this month, you spent this much on this dumb thing. That's why you don't have money right now. So being able to find somebody. Mhm.
No, I was gonna say quick shout out to Andy Collado. So he's over at the financial clinic.
Mhm.
They do wonderful work. He's also talked to me about options as well. So shout out to him and financial. Well, he used to, but now again, like as we get older, we start thinking about, okay, do we really want the daily stress? But since you mentioned Andy, like he was so helpful for not just us, but a lot of the talent that we've worked with. So shout out to Andy.
Mhm. Yeah, huge kudos to him. For me, my right move for right now, like you just mentioned, I won't suggest people buy this, but I will say take a look at it. And that'll be my favorite token of them all, BTC, cryptocurrency, Bitcoin. Right now it's hovering around like the high 40s. Last week it was in the 50s. um, I just say keep an eye on it. Keep an eye on it. And if you are willing to, like, you don't have, the thing is that you don't have to buy like a full Bitcoin. So you can just put money here and there. Not saying that you have to. That's something that I do. Just talking from my own personal, habits of mine. But take a look at Bitcoin. Take a look at all of the coins in the cryptocurrency space. That's how I got intro to stocks. Once I figured out like how cryptos work, I'm like, this is the same way how stocks work. Let me do like both of them. But crypto will always be my first love when it came to investing and or trading.
Awesome. So again, this was a special episode. This was our longest episode because we're so passionate about this. We look, the Risk Show is not going to be a stock show, for its duration. All right, but this is something that Derrick and I are both passionate about. We want to really cover so many aspects of your professional, but also your personal life, and it's included on this concept of risk reward, how we minimize the downside so that we focus on the upside. We hope to find the upside in your lives and in your opportunities. So please subscribe to the channel on YouTube, share, tell your friends. We're gonna cut up these clips. Again, we know folks are interested in the stock market, so hopefully some of these are helpful. So yeah, we are delighted to really take a deep dive on our own personal finances here. So we're pretty transparent. So and that's as the audience asked for it. You all asked for it. You wanted to know, and that's how we approach our portfolios.
It's very important to know of the wins and losses. Very important.
Yes, most. So again, we'll see you all next time. Engage with us. So Risk Reward Show on Instagram. You see my post on LinkedIn. Feel free to comment on that. But please subscribe. Put the on the YouTube page. Subscribe, share. You'll get new content. I think you saw a preview in the screen share of our new logo.
Ooh, I want to say it. I want to say it, but you did.
So shout out to Shito for making that for us.
Appreciate you.
And yeah, we're gonna a professional graphic designer. So we're gonna do a little bit of tuning on one of the variations of it, but you're gonna start seeing that beautiful logo sometime soon. So thank you
Looking
all for
forward to
joining
it.
us.
Thank you all. Be sure to subscribe, and we will see you next week. All right.